Well, thank you for joining us today as we're going to continue our discussion here with Courtney as we look on some trusts and some wills and some specific nuances within probably the most common ones. Last time we did talk through some of the specifics on just the idea of a will versus a trust at a higher level, the idea that it's okay to know that there's stumbling blocks out there, but it's important to have one of those in place, to go get one of those. So as we spend some time today looking at some of the questions that you're going to dive into as it relates to the most common wills and trusts that are out there. So Courtney, in the last video, you right at the end there, you talked about the most common trust out there being the revocable living trust. Can you explain what that means and some of the higher level nuances within what that is?
Absolutely, yeah. That is the number one most common trust that you will see. You'll see variations of it where it could be an individual, husband and wife have their own, or you can see it as a joint too, where they both are forming that trust. And really, in the joint trust situation, in the individual trust, what I tell clients is just think of it how you own your assets right now, individually or in a joint account. You are the one that is forming that trust. You are what we call the settlor or the grantor. People will hear those terms all the time. And you're also the trustee, meaning you have full control over that trust and what's in that trust. The revocable portion of it just again means that you will be able to amend it, revoke it, terminate it, do whatever you want, of course, as long as you are competent to do so. And so generally speaking, that is the most common trust that everybody will come across is that. Some of the common things that people will need to think about is, sure, you're going to be the trustee during your lifetime, but who is that person that you're going to want after you're gone to be in charge of things, and or during your lifetime if you're not able to act? Who is that individual going to be that's going to be taking care of your assets for you? And it can be as simple as, I need bills to be paid. Well, again, the accounts are in the trust. Who's that person going to be that's going to be doing that? And then again, of course, upon your passing, who's that person that's going to be to administer everything? The other things to think about and where people can get tripped up to would be, gosh, what do I want to happen to the assets I have upon my passing? And a lot of times people come in and think, I've got it, I know what I want, and we'll start talking about it. And then we go through the what ifs, and then we go through all the different scenarios, and that's a good thing. That gets the conversation going, that gets people thinking deeper than just at the surface level. So a lot of that's my job too, is to engage that client into thinking about some of those questions that they otherwise would not be thinking about, as far as distribution, charitable intent, the what ifs, what life does not go as planned. So we may want it split equally between our children, but what happens in the unfortunate event that a child doesn't survive us? What do we want happening after that? And again, that'll open up a whole nother
So Jeff, we obviously as well see that the most common is the revocable living. That's from the legal side. What does that mean from a tax standpoint? What, so if someone's out there watching and saying, well, man, I've got Courtney saying I need to do a revocable living trust now, that's going to just cause huge more complications in my tax thing. What is?
No additional complication at all. So while the grantor is still living, it's revocable. The assets commonly that we see held inside this trust would be, say, an investment account. That investment account still earns dividends and interest and capital gains, and that's all reported straight to the individual who created that trust. It's under their Social Security number. So in the eyes of the IRS, it's as if the trust doesn't even exist, and they pay tax out of their own checking book.
So put another way, nothing changes from a tax point of view. So the fact that Courtney spent all this time making this grandeur piece of art, if you will.
Thank you.
Our point of view, we know no difference. There's no tax change, no tax law changes, no separate tax returns, no increase in tax, no decrease in tax, no impact whatsoever until it actually goes through the trigger events.
Yeah, and I'm glad you brought that up because I get that question a lot as far as am I going to have a tax ID number for this trust? And you answered that question. Nope. During your lifetime, stays with your own Social Security number.
And I would say, by and large, forming a trust and doing this trust and estate planning isn't for income tax planning. It would be more so for planning the assets and how they get distributed and managed during someone's lifetime than after they pass. So income taxation is more of a secondary thought when it comes to trusts. And then if your estate is large enough, now you have estate planning concerns, not so much as income tax per se, but estate.
What I commonly tell people is think of a trust or a revocable living trust as a separate business entity that doesn't exist until the day you pass away. So everything goes along the same as always has. The day you pass away, boom, another entity is formed, and at that point it gets a separate ID number, a separate tax return, and it has certain consequences. But during the life that you're living here, nothing changes. So
I like to tell them they get another title because now they're a grantor or a settlor and a trustee. So, but otherwise everything else is treated. Again, the question comes up. Well, gosh, what am I going to do when I want to go sell property or something? How's this going to affect? You're going to do it the same as you can do right now. We have one extra piece of paper, but other than that, it's done exactly as you have always handled your assets during your lifetime.
Well, what would you say is probably maybe the next most common trust that is out there?
I would say, still a grantor revocable, but a variation and very popular, especially in northern Michigan, would be when we're talking about cottage succession and doing planning for all of these family properties that we've had, and we do utilize family cottage trusts for some of that. So that obviously is tied into the revocable grantor, but sort of a variation of that. So that one's very common here in northern Michigan. And then again, irrevocable trusts for a variety of reasons.
I smiled there when you talked about a cottage, and that's a whole video on it of itself. But we do a tax return. We do several of them for specific cottage entities that are now in a trust, and we have a few of them. One particularly has over 75 K1s that it goes to. That it's in the 5th generation, and they've got owners that are in Netherlands and all around the world. Some that have never seen the cottage, but it has continued on. And so there's a lot that goes into cottage law and what that looks like. And like you said, it's very common up here in northern Michigan.
Yep, one of those vehicles to be used for that.
Well, thank you for joining us as it relates to revocable living trusts. We look forward to seeing you on future videos, and thanks for joining.